Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Ceresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for January 31st, 2011. This is Patrick Ceresna. As always, we start off with a chart of the S&P 500 using that SPDR exchange traded fund symbol SPY. We've been looking for a market correction to begin off of this 129 to 131 zone. The previous week's Wednesday sell-off wasn't enough to spark that reversal, but Friday brought in a very big, strong belt hold line kind of candle on the downside, which really certainly brings in that selling right off a key overhead resistance level. This certainly could be the beginning of that market correction, but one day is not enough information. We need to see follow-through selling coming into Monday and Tuesday to kind of confirm that that was truly a breakdown candle. Nonetheless, we were always looking for this profit-taking cycle for the last 2 weeks. We're starting to really get it right in here. We anticipate the lows of that profit-taking cycle should come in somewhere within the 122 to 126 area on the downside. We'll all see, depending on how the magnitude of the selling and whether that selling really takes one wave or two waves lower, but nonetheless we do suspect, at least initially, that should emerge as a buying opportunity when we get down there, and that there should be still one more leg higher into the spring, and then subsequently we could start looking for the highs of the year later on in that March, April, May cycle. Nonetheless, we're just looking for that profit taking, and then we'll be looking for the buying opportunity. Next year, I want to take a look at that ISE U.S. Regional Banks Index, which is symbol JLO, and this is actually a similar situation to the S&P, where we hit a overhead resistance level at the 125.50, 126. We're now going through a little bit of profit taking. We anticipate that there could be further consolidation. If it got really intense, we could see down into that 123, 123.50, but it doesn't necessarily even have to go that deep during the sell cycle. The bottom line is that we don't really feel that there's a buying opportunity here, and a lot of investors that just take the time and patience to let the market sort of come to them, the buying opportunities will emerge over the next week or two at better prices. Next year, I want to take a look at the ISE Index, which is a symbol SIN. This is an index of all the casino, tobacco, and distiller companies. And we've seen a lot of these casino stocks really have a very robust rally over the last 6 months. And we actually hit a very critical overhead resistance at this 136 to 138 on the upside. That actually is a place where I'd be very suspicious of a very significant high. And while I do actually believe a lot of the broader markets can actually still have one more rally, I actually believe that that could contain the highs of the index even in any subsequent rallies, just for maybe potential retests into that zone. I'm not overly bearish on this index, but yet I think that it has the least upside potential versus all the other indices that we're actually following. Next year, I want to take a look at the ISE Home Builders Index, which is symbol RUF, and the Home Builders Index really has been sort of a controversial area where obviously the real estate market hasn't properly recovered in the U.S., and yet we've got this rally going on in the Home Builders Index. The prices of the stocks have already been relatively quite depressed, and there's certainly been a lot of selling pressure over the last 2 years in that sector. We've had a very bullish 1.5 to 2 month run. We're now just going through that profit taking, just like a lot of our indices, where like the JLO and other things like that, we would be looking for this to actually contain the selling somewhere around the $9.50 to $10 area on the downside. Wherever those lows come in over the upcoming weeks, we probably think that the home builders will present a buying opportunity to go long again on the upside. Next here, I want to take a look at the ISE Natural Gas Index, which is symbol FUM. And here we have natural gas stocks basically rallying straight right up into our 123 to 125 focal point up above. This is another market that I believe is stretched pretty high right up at these stages. We more or less have seen a rally that we could potentially even see one more leg of a rally, that even maybe might see 130 on the upside, but nonetheless, this is one area that is overdue for a good market correction. And if we do see something like a US dollar rally that drives many commodity prices lower, if we see broad commodity sellings, particularly what's already been driven in the gold and silver markets, but if we start seeing all the other commodity-based stocks starting to tip a little bit, these natural gas stocks can very naturally correct all the way back down to the 114.15 area, maybe another $8-9 lower. And if it really gets intense, we could see even selling down toward 106, 108. I never want to initially anticipate how deep a sell-off will get until we see how much momentum the sellers can actually pick up. If we just have very shallow selling, then the 114, 116 should contain almost any profit-taking cycle as we're trading through that. Finally, I want to take a look at the ISE Mini FTSE 100 Index, which is symbol UKX, and the UK market has really been weaker than the American markets. More or less, we're at a support line, but as soon as any catalyst starts breaking below this 590 level with momentum, it could really open the window for a much deeper consolidation that could have us retesting that 550, 560 area on the downside. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.